General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, just rolling. Start here. See what news. Goldman Sachs stock drops anyway. JP Morgan stocks flat after U.S. lender posts 12% jump. Okay. Euro dollar flexes across the board. What's happening? Tariffs. Nasdaq pump. Bet another Trump tariff reversal. Gold prices jump. Yeah, gold is going crazy right now. That's it for the news. Tuesday. 10/14. Today's price action. Well, I wanted to come here to go here. We came here. We didn't go here. And just take a look at this today's price action. Weekly opening price. Where will we go? Because we kind of closed that 50% of this. This is our accumulation range, which is also a holiday. We're still kind of 50% of this as well. Let me make sure this is on the right height. So we're kind of hanging around 50% here, but we broke out here. We still got a nice amount of gap left from here to here that hasn't been touched. So it needs buy side. Just off of price action, you could say we still accumulating because it's not really no expansion. You can say this is manipulation. Maybe this is Tuesday low of the week, possibly. It doesn't look safe to me though, because this gap is not full. This hasn't been retested to see if this is going to hold. What is this? Change this color. That's target. You have to see if this holds. So here we manipulate it. Price took Monday high and low. No sideline. Confidence level medium. I just wanted to see price move. Mm-hmm. This is a funny place for Asia. You know. Let me put a box here. Here we go. Asia high of the week. So possible anchor Asia high. We manipulated Monday. We need to distribute. If we should distribute and feel this inefficiency, I'm 50-50 as far as direction. We do have these equal highs here. The only thing I don't like about the buy is we kind of just, it doesn't look that strong. It looks like, okay, we have us a run up here just to retrace to the open. But what's to say we're not coming back down here? None of these bullish arrays are confirmed with the retest. Like even us coming back to this fair value gap, well, we respected it here, but we need to react to say it's certified bullish. Even to say it's bearish, you have to either break this or you have to sweep this or this, and this has to stop for it to be bearish. Let me take off some of this old stuff. So in here, you can say, oh, this is fair value for selling. Fair value. And it's untapped. Sales here will be optimum. Buys, if I want to buy, we have to buy here. Like, no matter what, the buy will have to happen here. That this order block or something. Let me mark order block. All right, now you wait. This already got took. Bam. No conditions. None of that. None of this. Nope. Possible Tuesday low of the week, but we need to retest the level to confirm it. No terminus hit. I didn't engage. I didn't trade. Oh, sideline. Right. Well, for one, just it didn't look right. Like here, Actually, this should have been a trade. It wasn't the correct stance. The New York KM session by delivered everything textbook. I should have took that trade. Because here, oh snap. You would have had to buy this gap. That's the only gap that tagged. But could have got. It didn't take out no liquidity. Everything for the entry was good. Price didn't deliver the target. What can I add to my experience? Even though I didn't take the trade because it looked off, it still was a good decision because price did not run or take out. What was it? Asia high. It pumped a little, but that wasn't the big move. If then next for the similar day. Next time, I don't think it looks right, even if the key level was hit. And we get a good reaction off that level. Something was telling me to not push. I had a feeling that today was going to be a small range. Most of it is due to last week being such a large range. I would not put it past this week to chop. Let's get these logs. I wanted to do the power hour, but it didn't do what I thought it was going to do. It actually went down. It actually has a good chance to go down too. Because as we in 50-50 conditions, who's to say we just don't go? This is a bearish stealing range. This is going to be one of the key levels though, which is 50%. There it is. It's right here. See the, okay, that's a good screenshot. Hold on 1 second. All right. No, Monday was small range accumulation. Manipulation day. Today was a manipulation day. We took Monday buy side and then took the low and closed back inside Monday range. Prices engineering liquidity. We have ASML earnings tomorrow. We should see some tech semi or tech sentiment. All right, cool. Let's go here to the hour. Stay here. Oh, okay. This is just something I did. Boom, boom. This is still the line in the sand. I'll keep the fib indicator there, but these are more targets for bullishness. I'll bring that back when we at all-time high. Keep it. Full influence. Nah, because it's bothering me. Boom. All right, see. Here we go. Bam. All right. That's much better. Did we come up to fair value? Did we sell? What is this? 2-2. What is this candle? Why does it feel like it did? Let me look at it on a lower time frame. Okay, it didn't. So from here to here, it missed by just a tick. So here, kind of like trapped order flow. Not too much stuff going on right here. We don't even have to take this high. This is an interesting accumulation candle that it looks like we had a reaction off of. So this low, this holds true. This created a gap too. We can sell from here. This hold true, this should be a target. Do this. Make it solid. Let's put a magnet for DOL. From here, it's interesting to go here. If we start buying up here, then we have to just start going the opposite because we do have, this is a cool little target. If we have to start buying, but I favor sell side just because of this dealing range, and we're not breaking this holds. We break through this, and then I'll look here. Just never know. Fair value for selling is up here though, and stopping these guys out just to get people excited. Like if we get up here, people will get excited. Oh, we're buying, targets. Take this out, and then rip. Where's 50% of this? Because this probably, yeah, that's strong. We shouldn't even come back here. Should not return. If bearish. We already reacted. We reacted to 50%. We reacted off of it and created a fair value gap. This should hold. Our line in the sand should be this up candle. Like, if we break this, we're bullish because we're over 50% of this. So it's going to be trading time. And we should actually get some good direction. I'd rather still go down. Just because I don't like that gap. All right. So now look at us. It's beautiful how he chops. Still around 50% of this candle. Hold on. Hold on. Control. Delete this. We get these links. Get the H1. Probably shouldn't retest the bearish OP. If we truly bearish, I don't think bearish fair value gap holds, and we take out Tuesday low. Buys become interesting if we react off the line in the sand. That's only if we react Go to the daily. The note here is don't be surprised if we chop our week, because last week was a large range week. Let's go to silver. We're just going to 100 probably. Good Lord. M15. Silver's easy because you're just looking for swings. Okay. This is the tacky gap. What is that for? Gap down, time distortion. We got bullish SMT here, but we didn't go up. What if that gap is on futures too? Wanda's like, nah, we don't even know what happened right there. Price really did sell off pretty good too. Asia took the high, like NASDAQ, and price dropped in a small range the rest of the day. No, this is silver, and it is H1. Okay, we could take this alert. I think I already got rid of that alert too. No. Delete this and delete this. So price came here. That was fair value for buying. This looks like the low. Like, price needs to come down here. This is interesting as well. I wouldn't even grade it. And let me look at this swing. Kind of close. You got OTE vibes. What is this? 50. How many zeros is that? 2? 357? We'll make it gold. OTE, I only needed only once. Have one per bar close to have your phone going out forever. Retracement, expansion ideas. Do I think this is the reversal? No, not yet. I think silver's too bullish. Retracement, expansion ideas. think this is a full reversal yet. We have no catalyst, so stay bullish. Hold on, catalyst. Let's go here to the daily. Yeah, this is not a reversal candle. This is a cool retracement though. And let's see, we got this intermediate term high. So we wicks on this. We trading at all-time high. Boom. Yeah, we almost to the 50% of this wick. That'll put us in this lower quadrant. I don't see anything down here that's super interesting besides just this price range being inefficient. Where's the old all-time high from a long, long time ago? Right here. What was this? 2011? All right. Yeah, definitely come down. Oh, all-time high right here. This is right up under Monday. This kind of lines up to what we were saying we want the retracement kind of right here. Lower is better, but it don't need lower. This is the last down. We had a down candle on the day. So it caused an expansion with a fair value gap. You can say it's order block, even though it didn't take liquidity in my eyes. Well, it did take some daily highs, but I will watch this. Matter of fact, this run up didn't create any fair value gap. This was the last time we had a run up that created a fair value gap. This is like accumulation. This is 3 days, 4 days. It's fractional consolidation for a market maker model. So if you want to sell, market maker complete will be, this is the 3 bar. This candle took this candle. This is, I'll go with range low. And what price target is this? $45 for a sale retracement. And we're at 53. That's a good trade. Then this is the real candle that started that. for retracements here. And there is a viable sale set up to 45 if price gives confirmation. Hold here. Tuesday low of the week don't look too convincing here. And we really didn't go nowhere on none of the charts. And we snapped back into Monday range. Price is not going anywhere, but I'm waiting for it. Okay. Why is my screen like that? Time frame H1. Chart image. There you go. We never came back here, which was interesting to see if we're going to confirm bullishness. The dollar's going up though, and I want the dollar to go up some more. So for this, I will want to see a sell. I will want to see it take Monday's high. What is this? Okay, it's a daily suspension block. Did we hit it? Nope. We already hit it a couple times. I'm going to keep it there because levels don't die. But I think this created it, and then we hit it Friday, re-hit it Monday. Let's see if I can find another one. I would call this a suspension block because I can see the VIs, but it's not naked eye obvious suspension blocks. All right, but like I was saying, Monday high should get taken. Yeah, this might work even better. Yeah, I can see that. Coming to get Monday's high. Where would I want to get it from? OTE, breaker. What was that? The hour chart I was looking at? Breaker. From breaker to here, anything here is a fair game. Unless we just wrong. We have OTE down here. Let me put this. It's OTE. And this will be our bullish breaker. And I'll target this. I like how this OTE kind of is paired with this fair value gap. We already smacked it. It's not fresh, but we still can reuse it. Do we have anything really cool down here? We have us a bullish order block, inversion here. Price closed. Boom. We just left. I want a sell setup to form up here for the sell for the longer side, but to buy the sell, that would be the idea. Hold up, wait. Because I just did it too. Hold on. Let's do this like this. All intervals. Boom. And then, hold on, wait. And just to make sure I got Monday high. Now, boom. Boom. All right. And that's even more refined. We take Monday's high, look for sales. If we retrace, I will try to get the buy to sell set up. Let's go here. Nothing on the daily. Daily's so boring right now. Take the daily high. I'll look for sales to swing to the swing low from the IFTA 60-day look back. Okay. Good. No. What did I learn about myself? Trust my intuition. Say don't mess with it. However you spell it. Will I watch for tomorrow? Sales on NASDAQ. And EU should take the high. And silver should retrace. Boom. All right. That's that on that. Let me put this in the Telegram journal. All right, y'all. Y'all have a good day. Peace.